We cross over to the JSE at this stage, where Forbes Coal is due to list on the JSE's main board. And joining us now is the company's CEO, Stephen Theron. Thanks so much, Stephen, for joining us this morning, and welcome to Open Exchange. Well, already listed in Toronto, we've got Forbes Coal moving ahead with its secondary listing on the JSE today. Take us through the rationale behind moving the listing here.
Yes, good morning and thank you. Forbes Coal, listed on the TSX main board. We do have South African assets and we are a Southern African focused emerging coal producers. We saw the JSE as a natural fit. It's obviously a good opportunity for us to attract some of the local investment base. And we are strategic in that we are one of the emerging coal producers. Coal is extremely in high demand at the moment, and we feel South Africa is ideally poised to take advantage of a bullish environment.
Well, certainly a good time if you consider the upside coal miners have enjoyed with regards to, the demand for coal and that coal price boosting earnings. So sentiment around coal miners at this stage, certainly very positive. What exactly are we looking at when it comes to your operation?
Yes, we've got two producing mines. One produces a bituminous mine that goes into the thermal coal market. We sell into the domestic industrial and also the seaborne thermal coal market, mainly going into India. And then we also have an anthracite mine that produces a metallurgical type coal that goes into the domestic ferroalloy industry and then internationally into the steel industry.
Taking a look at things, why has it taken so long to exploit, or why has, exploration of these mines been so slow in the past, and how are you planning to turn that around at this stage?
I think exploration and the production has been at a steady state. I think we've seen a turn in the market, and fundamentally the demand is increased over the last 3 to 5 years. If you look at specifically India, where there's been a tremendous increase in imports coming out of South Africa. South Africa, of course, are strategically poised and has good infrastructure, and we're going to take advantage of that. We have good rail sidings at our mine, and we also have, of course, the necessary export capacity at the Richards Bay terminal to deliver into that export market.
Let's take a look at that infrastructure capacity at this stage, because there's still a lot of constraint that infrastructure, places in terms of the bottlenecks that it offers mining operations like Forbes Coal, certainly. To what extent is that coming to bear and a hindrance for you right now?
Yes, I think it's a case of working together with Transnet, TFR Freight Rail. It is a constant, you've got to manage it on a daily basis. We have seen improvements on our siding through improved utilization, and we feel bullish about the future of the infrastructure in South Africa. I think it's time, however, that the government needs to step in and reinvest into the necessary infrastructure to make sure that South Africa can take advantage of the increase in demand for coal.
You've just concluded a deal with logistics group Grindrod as well for additional capacity. So run us through what exactly that opens up for you at this stage and how that enhances your export capacity.
Sure. Yes, the deal with Grindrod allows us to have an incremental capacity of about 1 million tons of coal. If you review our production profiles and our planned increase in production, you'll see that the majority of that increased production will then go into the export market.
And so capacity to meet those export allocations at this stage very much on track?
Absolutely, they're in place.
Well, let's take a look at the operations themselves, because, underground coal mining is generally more expensive than open cast mining in the country. How possible is it for you to compete on that level at this stage with some of the other competitors that you face in the South African mining space?
Yeah, we're fairly average on the cost curve if you compare us to the other miners in the country. Also, our mines have got very good seam thickness, so we can produce at an efficient rate. And then importantly, we do have a transportation cost advantage in that we are in KwaZulu-Natal, so we do have a shorter rail route into Richards Bay.
I ask because this is at a time where miners have become increasingly focused on those rising input costs and, how that's eating into their margins as well. And certainly now being a bad time to come to the market, if you consider the pressures miners are under currently. We've got all the wage negotiations that are currently in play, and coal miners are part of that at this stage. Your assessment of the environment right now, where cost pressures are on the rise?
Yes, cost inflation, I think, hits the whole sector. However, inflation is of course reflected in commodity prices as well. So, we've seen a steady uptick in coal prices, and we've been able to maintain our margins even though there's been a domestic pressure on specifically labour rates.
Of course, these cost pressures can be offset by even higher volumes moving forward. And part of your strategy in growing volumes has been to consolidate with other players or mines and projects close to your current assets. Run us through some of the strategy you're employing there.
Yeah, there's definitely a clear acquisition strategy. In our view, you need to scale the coal operation and get to a certain amount of tons in order to have an efficient cost structure. So we're definitely looking at other opportunities in South Africa, and also in other parts in Southern Africa where there are emerging coal regions, for example, in Mozambique. And of course, we know there's very good coal deposits in Zimbabwe, but that's a case of waiting for the political situation to improve.
So while there are no immediate plans to raise funds just yet, being fully funded, the company at this stage, safe to assume that you would consider that possibility if acquisition targets are clearly identified?
Absolutely, and that's why we're listing here on the JSE. We feel there will be demand from domestic investors and also, of course, from good support from foreign investment out of the Toronto. We're in an ideal situation right now.